The performance of Q4, first of all. Opening comments, how do you see the quarter? And let's understand further.
As you have seen from the results, compared to financial year 2022-23, we achieved over 20% growth for the full year. And FY24 also looking very, very bright for us. In terms of sales numbers, we moved from 3.7 million square feet to 4 million square feet last year. In terms of gross revenue, we had a growth of about 57%. And on PAT, we moved from about 17-18 crores to 68 crores for FY23 compared to FY22. In overall sense, we had a very, very satisfactory year, achieving growth on all aspects, whether it is a pre-sales volume or overall sales price achieved, or the collections, or the construction output, or the revenues, or profitability, has been a very, very satisfactory year for us, and we have achieved good growth for FY23. FY24, we are looking at, again, continuing with the same growth momentum. We are looking at 4.8 million square feet to achieve on pre-sales numbers, which is again another 20% growth that we are looking at. With respect to the selling price, again, we are looking at good growth on selling price. Last year, I gave you some guideline that we'll be able to achieve over 8 to 10% on the selling price growth, which we have achieved. And market at macro level has been supporting us quite a lot, particularly the mid-market housing and affordable housing segment. There has been a good support, and the macro market is doing remarkably well. And governments across the country, both state government and central government, have been giving good support for mid-market and affordable housing. Hence, we expect to continue with the growth momentum for FY24 also.
Sir, let's understand the demand scenario, because we have seen a tremendous amount of interest in buying real estate properties right now. We are looking at very good gross collections at about 1,200 crores. What kind of demand we are looking at right now, and what kind of trend line are we expecting in FY24?
As I've been saying in the last 2 years, COVID is over now, work from home is over now, people all come back today. Sheer urbanization, which is happening today, and huge demand on the housing, particularly on the middle income housing. There has been a tremendous demand. I expect the demand to continue at least for next 5 to 8 years time. On the other hand, because of the consolidation, supply has come down a lot. Number of real estate developers come down a lot. Because of that, one side there is supply pressure, one side there is a demand pressure. So we expect next 5 to 8 years time, there will be a constant demand for the mid-market housing in a big way. And as an organization, we are well positioned in the mid-market housing and affordable housing. We expect to grow easily 20 to 25% year on year for the next 5 years.
Definitely, sir. Very interesting insight. Now let's understand the impact of this launch impact. It was a delayed launch impact, and then still we have seen a very good collection overall. We have seen that you have completed 7 projects. What is the update? What are the new projects we are looking at right now? And looking at the collection numbers, there is a frenzy obviously in buying market. So what kind of numbers can we expect in FY24? Since we are in the beginning of a new financial year, we can expect some sort of guidance from you, sir.
So last year we missed 2 projects launch in Q4, which got pushed to Q1 this year. This year we are looking at, 11 to 13 projects we are looking at launching during FY24. Q1 now, we'll be launching 2 projects. By Q2, we would have launched about 7 projects out of 13 projects. So project pipeline is very good. Close to about 5.7 million square feet of new supply, which is coming in for FY24, which will give a big push on the sales momentum. Apart from that, whatever the projects which are under construction, which is giving additional volume, of about another 6 million square feet. Overall, we have about close to 12 million square feet for this year, FY24. Usme 4.8 million square feet is what we are looking at for FY24. With respect to collections, as you know, last 3 years, we have consistently delivered over 3.5 million square feet of pre-sales. That's coming into big time on collections. Collections also this year compared to, 1,200 crores. This time we are looking at FY24, at least another over 20% growth for FY24 in collection. And as well as on the project completion and the revenue recognition, we expect steady good growth for FY24 also.
Also, sir, we have seen a good number of growth in the realization. Average realizations has grown almost like 14% year-on-year basis. But we have seen the price hikes of cement, we have seen the price hikes and volatility of metal. How do we have coped up in this inflationary situation? What kind of trend line are you expecting now on? Are the price of cement and metal have settled, or still some kind of volatility is there?
Yeah, still some kind of volatility is prevailing now. It's not fully settled, but government has intervened at the right time when cement and steel prices were shooting up. Government has intervened at the right time and brought in good control. So I would say it's fairly in control, but still some of the construction materials are subject to volatility. Hence, we need to provide for that. Also, that is also one reason this will lead to pushing up the apartment prices. So we are providing for some volatility on the construction price increase by government really in this election year. Even without election year, government has done a fantastic job in controlling the inflation. So again, central government has been playing a very, very important role in controlling the inflation. We don't expect a major challenge, but having said that, we need to be prepared for any uncertainties or volatility on the some of the construction materials, but we are providing for that. On the other hand, as I said, we expect at least about 8 to 10% selling price increase. That will help us in supporting if at all there is any price increase happens.
Okay, sir. We have seen a trend where the new collection is making records in real estate markets. But on the other hand, we have seen that the EBITDA margins of all the real estate companies are decreasing or showing some sort of impact. How are we standing at the EBITDA margins, and what kind of expectations can we have for FY24, sir?
We have been maintaining good growth in line with the guidelines what has been provided. We are at 22% EBITDA margin, which is a slight increase from last year, FY22. Again, for FY23, we expect maintain the same momentum of growth on revenues and as well as profitability. So FY24 is looking much more brighter compared to what it was FY22 and 23. So we are in line with the guidelines what we have provided. When we listed the company 2021 December, we are continuing the same momentum, and it's only increasing further and further on growth today. Given the market dynamics today, given the market opportunity today, particularly on the middle income housing, so we are very, very optimistic in looking at growth across all parameters.
Definitely, sir. Other than that, let's understand the property market situation right now, since we have seen a tremendous demand, and the situation is gradually growing up. We also have focus on plots. So in terms of the housing units and in terms of plots, we have seen the realizations were higher. But in terms of legitimate demand, what kind of traction are you looking at the flats or housing units, and what kind of traction are you looking at the plots? What is more in demand in terms of the plots, or are you looking at more demand in the flat situation right now, sir?
Both. There has been a good demand for both homes and as well as the plots. See, particularly COVID has taught a very big lesson for the buyers. Indians basically have gone back to their originality, saving. See, Indians by nature saving mentality people, and savings is part of our DNA. Just before COVID, 2-3 years, things were going in, very, very aggressive growth. People also started moving away from their core DNA. Now, COVID taught them a big lesson to bring them back to values of family systems and living together, and also, looking at how do they save more money. So, COVID, in fact, has been a greatest leveler for, all over the world, particularly Indians. We have come back to saving mentality. So now that there is extra saving which is available, otherwise now they would have spent on something else. So that money they are putting into real estate. The people who are first-time home buyers, they look at homes as the option. The people who have already bought homes about 8 years ago, 10 years ago, they are looking at second option of buying a plot. So there has been a good demand on both plots and as well as the housing, because, for example, cities where we operate, whether it's Bangalore or Chennai or Calcutta or Vizag or Pune, all these cities, there has been a good growth on the white collar job for the last about 15 years. The people have moved in and bought their first home about 10 years ago. They got extra disposable income in their hands. So either they'll be looking at second home or they'll be looking at buying a plot. So there has been a tremendous growth which is happening. Having said this, on the other hand, if you look at the supply side, there has been a serious constraint on supply side because of the consolidation which has taken place in the market due to several factors. Consolidation has taken place due to factors like introduction of RERA or GST or demonetization. Again, we are thankful to the government for announcing another note ban on larger currency. So all that will push the buyers or the people who have got good savings converting into buying home and real estate. So hence, all these consolidation, all these measures taken by the government led to quality suppliers today. So whatever the people who are not good quality suppliers are moved away from the industry. So there are only limited quality suppliers in real estate. Developers like us, large developers like us, corporate developers like us, have a serious advantage in capturing the growth today. So while on one hand demand is growing bigger way, on the other hand supply is coming down a lot. So it's a good situation for us to be in this space, and the next 3 to 5 years it is likely to continue.
Definitely, sir.